Good morning. Today, this is the second in my series of Ask the Expert. And I've got my good friend here, Colin Sneddon from Carnegie Mortgage and Protection Limited. Morning, Colin.
Morning, how's it going?
Not too bad, thank you. Not too bad. Now, I've known Colin for, well, we're having a wee chat earlier, I think probably in excess of 10 years. So
Yep.
Colin is extremely experienced within the self-build sector and has dealt with, I suppose, hundreds of people, kind of self-builders and help fund their project.
I've
right?
I've not kept count, but it must be in the thousands, and I do get ribbed by my colleagues for saying that, so I thought I'll get that in as well.
Good man. Well, that goes to show what kind of experience you've got in it. So you're not, you wouldn't be speaking to a newbie, you'd be speaking to somebody who knows about self-build and all the various construction types, etc. And the most important thing I think always to mention is the actual cash flow. So very well getting a mortgage, but when can you get access to it? So if it's okay with you, Colin, I have some kind of questions here that I think would be typically asked by, prospective self-builder. So let's just straight away fire into them.
Yep, sounds good.
So, in terms of how long should someone actually allow for arranging a self-build mortgage? I know it's maybe how long is a piece of string, but there would be an average.
Yeah. I mean, I'd say the stock answer is 10 to 12 weeks, but it can take longer. I'd always say start as early as possible and allow plenty of time. If you've got everything ready to go, so you know all about your project, your costs, all that sort of stuff, and you get a clear run at it, then sort of 10 to 12 weeks is realistic. If not, it can drag on. One big thing about the costings is that the lenders need quite a lot of detail for that, which people, no fault of their own, might not have at the stage they are. If they're looking to buy land, for example, they might not know the detail of the cost. So sometimes they get to that stage, they have to kind of pause to go and find out more the detail required by the lender, and that can cause things to drag on a bit. So just give it loads of time, because I mean 3 months is average, but I mean it could be a lot longer than that depending on the situation.
Yeah, that's it. I mean, I guess that, and particularly after the financial crash in 2007, 2008, I think lenders are generally looking for a lot more information. I think the only thing they don't ask for is your inside leg measurement these days. But
yeah.
Okay, no, that's good. And in terms of, you mentioned the information that they would actually require. So can you maybe, just kind of expand on that a bit? What would be fairly typical information that, you would be looking for at that point?
Yep. So at initial stages, it's all the standard mortgage information. So personal details, address history, income, employment details, details of loans, credit commitments, all the kind of typical information you'd expect from any mortgage inquiry, really.
Yeah.
On top of that, from the build, you're looking at knowing a land cost, or if you already own the plot, the value of the land, roughly, build costs, estimated end value. Also, most lenders want quite a lot of certainty of what you're looking to build. So they'd want to see floor plans and elevations, details of the building system. And you touched on it in the intro there, Mike. The building system has a big impact on lenders. Not all lenders lend on all systems and materials. So it's good to have an idea of that early on to make sure the lender you're applying to is going to accept the design and materials that you're planning to do. And then maybe on top of that, site and location plans as well, if there's anything unusual about access, or if you're building adjacent to family. Again, not all lenders like that. So that's the normal kind of mortgage information, and then that's a kind of the build type information.
Yeah. I suppose it's really like everything. I suppose it's kind of horses for courses. You would know, dependent on a client's particular circumstances, which lender is more likely to be happy to lend on that, that particular occasion.
Yeah, definitely. And that's one thing that self-build mortgages are a lot more nuanced than a normal mortgage. And that's why it pays to speak to someone like myself who knows the market and the products and what lenders do and don't do, because you can get caught out with with things that lenders won't lend on in terms of building system and cash flow and all those things that you mentioned as well. So, and again, when I'm talking, I'm trying to sort of distill the whole market into one answer. So there are variations from lender and product to product.
Yeah, no, I understand that. In terms of if someone was to actually own a plot, or no, let me reword that. If someone was looking to get finance to actually purchase a plot, is that possible?
Yeah, absolutely. Yeah. So lenders generally, again, a generalization, you can borrow up to 90% of land and build costs. So some lenders, again, 90% is a bit of an outlier, but it is available. So you could get 90% of your land cost, 90% of your build cost. So you could build with a 10% deposit. Lenders won't lend just on land though. So they'll look at the project as a whole. So they would want to see, well, they'd want the plot to have planning permission, at least outline planning permission. They would want to see your drawings of what you're planning to build and a breakdown of the cost as well. But yeah, you can definitely borrow to buy land. You can get land only finance as well, but it's rare, it's really expensive, and it's almost like a bridging loan. So lenders are looking to give you it for you to get the land, but then they're looking for you to exit, is the terminology used, fairly quickly.
No, I would understand that. It surprises me that they would potentially lend on getting outline planning permission. I thought it might have to be detailed planning permission.
No, you can borrow on. So again, different lenders are different. Some lenders will only lend with detailed planning permission in place, but in terms of stages, some lenders will lend on land. So they'll agree finance for the whole project. They'll release the first stage release of funds to buy the land based just on outline planning. And then they won't release any more money for the build until you've got your detail planning and then your building warrant if you're in Scotland, or building regulations in England and Wales once that's signed off. Okay. But yeah, they will lend on a plot with, or some lenders will lend on a plot with outline planning.
Right. Okay. Now, if the self builder already owns the plot, can that be considered as being like the deposit for the mortgage?
Yeah, definitely. Any equity in the plot could count towards your contribution towards the project cost as a whole. So, and it can also help with cash flow as well, which I'll touch on. But you can potentially, if you own the plot, borrow 100% of your build costs. That would be subject to affordability. You need to be able to afford, as per the lender's affordability criteria, to borrow all of the costs to fund the build. So yeah, it's definitely something that you can do.
You can do, yeah. Okay, no, that's good. And in
terms what I was going to say on the cash flow. So if you own the plot outright, then lenders will lend against that immediately on day one. So if, for example, you had a plot worth £200,000, the particular product you were applying for would release funds at 75% of your stage cost or value. Then on day one, you could get £150,000 upfront to start building. So you could have a positive cash flow and borrow against the equity in the plot to start funding the first stages of the build.
Oh yeah, okay. No, that makes sense, because I suppose really from a lender's perspective, they've got a fair bit of skin in the game, I think is the expression.
Yeah, exactly.
Yeah, okay. I think you mentioned earlier now, was it up to 90% that is the level of mortgage percentage you could actually achieve?
Yeah. So that's a bit of an outlier. Quite a lot of lenders will do 80, 85. Some will go back 75% as well. So what you would need at that level of borrowing is what's called an advanced stage payment mortgage, which is a tool. It's a good product. It guarantees cash flow, make sure you get the funds when you need them in advance of each stage. But you don't always need that. If you've got a bigger deposit or you've got equity in the land, then you might not need that type of product.
Yeah. So I suppose, would it be fair to say that maybe, more typical would be in the region 75-80% would maybe? Yeah.
I'd say so. A lot of lenders even still do 80-85. So that's not uncommon at all. Right. But what again, it's sort of trying to abbreviate an entire market, but
I know it's a wide
the
scope.
more, what I would always say is the more cash you've got, the more choice you'll have, and then the better product you might potentially get. But if you want to build and you've got a 10% deposit of land costs and build costs, then it could be possible. You need extra funds for legal fees, professional fees, things like that. But in terms of the actual project, you can do that with 10%.
Okay. Okay, if we're in a situation now where, you know, we're actually going to progress with the build, I mean, does the work have to be carried out by a contractor, or can it be, you know, self-managed, or using a professional project manager? Does that influence, you know, the lending criteria?
Not really. So most lenders will let you do the work yourself. They'll probably question if you've got the ability. Like someone like me, I can't change a light bulb, so they would ask if I'm going to manage to build a house. So, but yeah, as long as so say someone was a builder or joiner or had some sort of trade experience, then absolutely the lender would let you build the house yourself. One big question that they would ask is, would that affect your income? If you're spending all your time building the house, is that going to affect, if you're self-employed, for example, or if you're employed, is that going to affect your ability to earn? And because it's earnings that the mortgage is based on. So yeah, but you could absolutely, if it's feasible that you can build a house and it won't affect your income, then yeah, most lenders would let you do that. Okay. In terms of management, again, that's something that lenders will do if you aren't actually going to be hands-on with the build, but you're going to be managing it. A lot of lenders will ask what experience you have to do that, and is it going to affect your day job type thing, and if that's acceptable to lenders and they're able to do it. Some lenders insist on a separate separate project manager, which can add extra cost, which isn't always practical for people. And then at one extreme of the spectrum, some lenders who are quite cautious about lending on self-build, they might even instruct their own monitoring surveyors. So you go from being able to do everything yourself, literally lay the bricks, to some lenders would say, well, we need to have a monitoring surveyor that's going to do regular visits just to keep them up to date with the project. So, but generally speaking, it's not an issue at all.
Yeah, no, that's generally, you know, in the path to self-build success, that's really where I, you know, can assist people who maybe have the aspiration to self-build but don't know how to go about it. So yeah, I can help them through the entire process, and, you know, including project management and on their behalf. Some people, you know, as you rightly said, you know, maybe have the aspiration but don't have the time or the knowledge. Well, yeah, you know, I've got the time and the knowledge, so I can certainly help them. So it can be a good, you know, a good fit, and I can do as much or as little as they want me to do, but certainly can make the whole process an awful lot easier for them.
Yeah. Yeah.
Okay, no, that's good. In terms of the actual payment of the mortgage, really, in terms of, because obviously cash flow is king. It's all very well having a mortgage, but you need to have access to it at the appropriate time to, you know, to pay the tradesman. So, I mean, is there? I mean, I've heard of the expression like an accelerator mortgage, whereby you get paid the money in advance, so then you can then pay, you know, kind of pay the contractors, or obviously there's the typical arrears kind of mortgage. Can you just explain a bit about that? Yeah,
so most lenders will lend on an arrears stage payment basis. So that's after you complete each stage. So in order to facilitate that, you need a bigger deposit to do that, because you may have to pay a deposit on the land and then have cash left over to start funding the initial stages of the build. In terms of that, particularly with a timber frame build, for example, a lot of the cost comes early on. You may have to make down payments on the kit, and then as the kit's getting constructed and delivered, by that point, generally you have to pay for the balance in full, which could be quite hefty depending on the kit, the size and spec that you're looking for. So if you've got cash or you've got lots of equity in the land, as I mentioned, you can borrow against, and then the arrears model can work fine for you. And it's all about cash flow. And again, that's like most self-build mortgage products, the lender will assume the cash flow is going to work. And that's a big pitfall that people can fall into, because the lender will approve it, and then maybe release funds to buy land, for example, and then you might go back to get your stage to build, and at which point the lender won't release any funds until the build's progressed, but you don't have the funds to do it. So again, that's why speaking to someone like myself who knows the quirks and the nuances of lending and the policy that lenders have on cash flow can make sure that doesn't happen. Where you aren't fortunate enough to own the plot outright, for example, or have a large cash deposit behind you, that's where the advanced stage payment mortgage model comes into its own, really. So that's where you can borrow with 10%. The difference with that is the lender will give you up to, again, a bit of an outlier, but still up to 90% of the cost of each stage in advance of it happening, and then you top up each stage with 10% from your own funds. On that model, cash flow is guaranteed. There's no uncertainty, because on the arrears model, sometimes it can be a kind of strong possibility, but it might be tight. And at which point, I mean, people do it, and it's sometimes that's their only option, but it could be sleepless nights and stressful situation, making sure you're going to have enough funds to get to a stage before you can get the next release. The advanced stage payment mortgage takes all of that out of the equation. Cash flow is guaranteed. It's a lot more simple in terms of how the lender lends. They just give you the money as and when you need it, and it takes all the stress and uncertainty out of the project. Or the funding of the project. Not the project, still plenty of other stress, but in terms of finance,
that's it. But I mean, certainly, a lot of things that kind of do come down to the pounds and pence. So I think having that or being aware of what the situation is, as I say, and when you actually need the funds is absolutely key. Because I've seen that so many times where projects stall and there's an assumption made that they're going to get the money at a particular time, and that doesn't, come to fruition, and then they're actually stuck. So I think it's something that needs to be get into in a lot of detail at the early stages, so you're never in that, you never fall into that problem situation.
Yep.
So you mentioned the stage payments. What would be the kind of typical stage payments, Colin, in terms of the stages of the actual build? It would be an arrears payment. So
again, it varies from lender to lender. It varies from product to product sometimes. Generally speaking, the stages would be potentially on land purchase or against the value of the land. So thereafter, it can vary on the building system and also what stage of the project you're at. So we would have foundations and groundworks.
Yeah.
Then if it was a timber frame build, the next stage would be having the kit erected. If it was masonry, it might be wall plate level. If it was like an ICF style build, I'm not sure everyone knows what that is, but that's
insulated concrete formwork for those that
exactly. Yeah. So that would be getting the walls up ready for the roof to go on as well. So that would be stage 2 of the build. Third stage is weather tight, so that would be getting the roof covering on if you're having render or cladding on the build. Again, all the outside's done.
Windows and doors installed.
Yeah. Sometimes lenders will make exceptions if you've got handmade wooden sash window or something like that, and you don't want them in, and then having plasterers wrecking them. Then sometimes we'll make an exception to that. But so it would be weather type would be the next stage, then first fix, and then second fix through to completion. So generally that would be the stages. Again, it varies. Some lenders are a lot more flexible and they have stage payments. Renovations and conversions might be completely different because they're all different in terms of how you build. You might not have to do any groundworks. You might have to demolish something first. So renovations and conversions are a bit of a kind of law unto themselves. But from a build, you're looking at foundations, walls, weather type, first fix, second fix.
Yeah,
really.
No, and as you rightly say, it would depend on what building system you're actually using. And you're right in terms of, if they were building with timber frame, then there's a fairly hefty sum going to be paid at an early stage, because the kit manufacturer will generally look for an initial deposit, and then before they supply the kind of wind and water structural package, they would be looking probably for 75-80% of the total kit value. So can be a pretty hefty sum. So again, key to know that at an early stage from the whole cash flow perspective.
Yeah, absolutely.
Right. So in terms of, given your level of experience, what's the best piece of advice you would give a self-builder, who is looking for a mortgage, Colin?
Speak to me. No, and well, and all yeah, I'm biased, obviously. So start early, number one, because it can take a lot longer than you expect. One thing, this is kind of general self-build tip that I've never self-built myself, but just learned vicariously through working with others, is I would always say try and do as much as you can at the same time. So look at finance, your builder, costs, design, all that stuff, because some of them you have to do in sequence, but if you can get as much going at the same time, it can cut down the overall time. But in terms of mortgage specifically, start early. Speak to me or someone like me who does understand the nuances of self-build mortgage lending, so things like cash flow, the build, flexibility. So a lot of lenders might tie you in for 2 or 3 years, whereas some products will have no tie-ins. So interest rates can be a little bit higher than you get from a normal mortgage. So where you've got that flexibility to get off of that rate to a standard residential rate, then you can end up saving a bit of money on that in that respect. So yeah, speak to an expert, start early, try and do as much as you can at the same time, just to cut down the overall time it takes to get ready to start building.
No, I think that's great advice, and it's something that I do always kind of bang the drum about as well, is because when you're actually self-building, there's lots of decisions and things you'll be involved with during the actual build, and you really want to be dealing with as much as you can early stage, even before there's anything done on site at all. So the more of that you can get out and get cleared, then the clearer a path you have to deal with the day-to-day questions you will have to answer during the actual build, because even though you were getting a builder in to do it and kind of do the whole thing, there's still lots of questions that the builder will be coming back and asking you at a particular time. So the clearer the mind you've got then, and you're not have a cluttered mind dealing with all other things, the better it is, because then you can generally make a far better informed decision if you've got a kind of clear head.
Yep. No, definitely. And some of these things, someone will say to me, I'm going to go do my planning, and then I'm going to apply for my mortgage. But sometimes if you lay these things end to end, then you could be like 3-4 months on planning, 3-4 months on mortgage. So we're in March now, so you could miss 2023 if you're going to do that, for example. So it's
building the summer, exactly that, guy. So
yeah,
I agree 100%. You can never start too early. Because invariably things always take longer than what you think they're going to take, and that's just the reality of life. And I'd say exactly the same with people that are applying for planning permission. How long is it going to take? Well, how long is a piece of string? And obviously a lot of council workers will appear to be working from home at the moment and are still using COVID as an excuse to kind of delay things. So that's the reality. Okay, Colin. No, I think that's been, that's been good. Thanks very much for that. So,
pleasure as always.
What I'll be doing is, I'll put on your contact details. So if anyone wants to contact you and discuss their particular project on a one-to-one basis with you, and again, if anyone's got any questions in terms of the kind of services I offer through the Path to Self-Build Success, I have an online course. And as I say, if they want to kind of talk to me about what services I can offer, then more than willing to do so, and have an initial kind of half-hour chat free of charge. There's nothing, there's no charge for that, and presumably the initial chat with you would be a free of charge situation as well, Colin?
Yeah, we do charge a fee, but only once the mortgage has been fully approved. But there's no cost or obligation in getting in touch and having an initial discussion and seeing what your options are. Okay, no, that's perfect. Thanks very much for that, Colin. I think that's